Hey guys, so as promised, I'm gonna be giving you guys a YouTube model to use alongside the way I trade. Okay, so it's gonna be quite simple. It's gonna be complete. I'd say 70% ICT, 30% mine, right? Because I can't really give you my private mentorship stuff, although that's like 100% my content and 100% 100%, it's made with my concepts, right? So I gotta give you something that's available publicly in a way that I use it. Okay, so the YouTube model for me is going to focus on fractal reversals. Yeah, so now how are you going to go about this? Now, if you're watching the last few videos, you'd know that we spoke about dealing ranges. Yeah, so we saw that for us to have a bullish dealing range, we must see price take out a high, take out a low, and then break higher. Okay, now what we're going to do is we're going to use the Fibonacci, the valuation tool, on the manipulated range, and we are going to be focusing on that 50. Okay, so you're going to want to buy at or around this 50. Okay, so something like this. Stops are going to be here or at the 75% of the range. All right, I will get into take profit later. Okay, but if you want me to get into it now, I'll just get into it now. So the take profit, right, is going to be one standard deviation of this manipulated range. Yeah, as ICT would call it, that's your measured move here. That's your take profit. One and done. Okay, one and done. That's your take profit. Okay, so the other side is the bearish one, the bearish example, right? So the bearish one requires us to do what? We need to see price do what? We want to see price form a high, take out the high, then take out the low, and then retrace into the 50. Yeah, and I'm pretty sure I just made a mistake over here. I did not mean high first and then low first then high taken for a bullish dealing range. For a bearish dealing range, high taken out then low taken out for a bearish dealing range. Okay, you want to see price come into the 50% of this manipulated range. All right, so now you would want to sell somewhere here or here. That's your stop loss placement, here or here. Okay, your take profit is obviously going to be one standard deviation, something like that. All right, that's what your take profit is going to look like. Keep it simple, nice and simple, right? Okay, that is how you're going to be looking at things. Now, in order to make this a high probability trade, you're going to want to have some measure of an SMT of the lows. Yeah, so bullish SMT, and you want to have a bearish SMT for the sells. Okay, that's what will make this a high probability trade. All right, so without further ado, let's look at some examples. Yeah, I'm just using the indices for the purposes of ease, right? So let's look at the PM trend from yesterday. Yeah, the PM trend. So the PM trend begins at 1 PM EST here, right? So from here, I want to see whether we have any form of bearish SMT, because price broke lower, right? Obviously hindsight, who the fuck cares? Okay, here, look at this high. These are the highs that we're looking at, right? So if you draw a line there, you can see this made a lower high, that being US 500. Then US 30 made a lower high as well, while US 100 also made a lower high. Yeah, US 100 also made a lower high. All right, US 100 also made a lower high. So is it truly a lower high though? I mean, let's compare the highs. Okay, let's see. Here this high is 10801.35. This is 10784.95. So yeah, there is no bearish SMT. Okay, there is no bearish SMT. Okay, then from here you can see this made a higher high, this made a higher high. Everything over here is making a higher high, right? And there is nothing that we can actually use. Okay, all right, we'll look at the next break now. The next break is down here. Okay, if we are comparing all these highs, now let's see, from here to here, these are all high highs, right? What about from this swing point here? It's all lower highs. Yeah, all are lower highs here. Now what about this? Everything leads to a high. So do you have any trade with this model? There is no trade with this model, because to make it high probability, you are looking for a what? Bearish SMT. Okay, you are looking for a bearish SMT. Now what if you were to just forget about the bearish SMT, or what if you were to forget about the bullish SMT? Then do you have some bearing for, for this model to work out? Yes, you can use the model without the SMT, but that just makes it low in terms of probability. Okay, but if you guys are watching my earlier videos, the really old videos, you would know that if there's a displacement associated with the breakout structure, it's indicative of what? Order flow. So look at this, right? Price breaks down after taking some buy side here, buy side taken, sell side taken. This is our manipulated range. There is your sell, but the only thing that's missing is what? SMT. That's the only thing that is missing. Okay, no SMT, it just makes it low in terms of probability. All right. Okay, then what about this? Let's see. Here, do I have any bearish SMT? Let's see. Nope, I don't. So without the bearish SMT, if I just value this range, can I sell? Why can I sell? Because we took out buy side, then we took out sell side, right? So the bias is what? Based on the dealing range, the bias is bearish. That's your sell. But remember, there is no SMT with this. Alright, but now look at this. When we're coming to this point to sell, right? Can you see here on the US 500, right there, it made a higher high. US 30 made a higher high, while US 100 made a lower high. Yeah, you see that? So when we come here and when we see this SMT, this makes this trade a high probability trade. Okay, so you can take a sell over here, and when we break lower here, we already know that there's SMT here, right? So when we break lower here, right there, and we also broke, I believe, this swing low as well. So right here, right, we're gonna use it over here, all the way here, and you can see there is a sell. Okay, right, now between this larger one and this smaller fractal, right, look at this. This is our manipulated range right there. Okay, measured move is going to be from here. That's your take profit. Okay, what about from this small sell over here? Well, this is the manipulated range before price retraced. Measured move is going to be there. Alright, so if you were to sell up here, stop being above either here or here, you're going to keep your take profit there. And if you're going to sell here at this retracement right here, you would keep your stop somewhere here, and your take profit is going to be this. Okay, that's the model. So these are the bearish examples, right? So now let's look at some bullish examples. Why don't we? Let's go. Let's check out the London session here. All right, let's bring these guys down. Okay, reset these guys. All right. Okay, now let's look at some buys. Let's turn these to lows. Lows. Okie dokie. Okay, so your London actually is over here. So London lunch hour. All right. Okay, now what can we see? We can see that we have a high there, we have a low here, right? And do we have any bullish SMT that can be seen here? Can we see any bullish SMT? No. Okay, we cannot. Okay, what about here? Let's see, low, 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 low. What about with these lows over here? Let's see. Well, everything made a lower low. What about this one? This one, US 500 did not make a lower low. So from here, okay, from here it did make a lower low. Then from here, okay, that also did make a lower low. Yeah, so these guys, it did indeed make a lower low. Okay, so there is no SMT. Okay, no SMT present. Now price break structure. Okay, it takes out sell side here, takes out buy side here, and then continues to break structure up until this point. This is the last structural point that was broken. Okay, this high right here. So you're going to value this range like this, there. Okay, and there's your buy. Okay, there's your buy. All right, it goes down, rallies up. Okay, you can also argue that, okay, fine, what about this range, because price broke that and then came down here. Fine, no issues, you can use that as well. Okay, so price comes down here into the 50, below that also for inducement, and then starts going higher. Okay, is that the only high that was taken out? No, look at the last high that was taken out here before the retracement. So see this wick here, took out this high, so we'll move it here. Okay, that's our manipulated range, that's our 50. Yeah, you're gonna buy over here, or if you know inducement, you can buy below this. Stops are going to be at the low. All right, okay, your SMT, right? Low, 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 no SMT. Yeah, you have no SMT whatsoever. So if you buy over here, right, if you're buying over here, what's the measured move target? There. So let's say you're buying here, for example. Okay, let's say you're buying right there. That's your target, to keep it simple. Okay, that's your target, to keep it simple. Right, from up here, right, from up there, if we are considering any bearish SMTs on the highs, okay, if we are considering any bearish SMTs on the highs over here, I can see that, okay, there isn't much of an SMT. See, everything has a lower high here, higher high, higher high. Here, look, while these guys had higher highs going on here, right, let me mark it out for you right there. Can you see that? Here, right, you can see that this one had a lower high. When price breaks this low here, there's your sell. Not this, not this, not this nonsense over here. That is your sell. Okay, right there. Okay, now what's your target? Your target is going to be a measured move of this small one, right? You don't have to stick to this measured move thing. If you know that this is the high of the day, you can definitely just go for the London low. Okay, right. So I hope this gives you guys some insight as to how things can be done, how you can combine these things, right? SMT makes everything high probability. You don't have to, you know, stick to it. It would be better if you have it. Okay, so that, guys, if you found this helpful, let me know. I know some of you all did find it helpful. You all actually created this model yourself and sent it to me, even though this was what I was going to share with you guys, so kudos to you on that. If you need anything, let me know. I'm always available on Telegram and on Instagram. Everything will be in the description down below, right? Join the public Telegram group. All right, and I will not be having any boot camps until December. Okay, the mentorship is open for everyone, and I will be opening up one-on-one slots soon, because I'm finishing up with all the one-on-one guys. They're doing phenomenally well. Beautiful job done by these guys. Yeah, so yeah, that's pretty much it, guys. So with that, I'll see you in the next one. Good luck and good trading. Bye bye.